Alrighty, folks, we have had two remarkable years in the stock market. I believe we've had back-to-back years where returns have been north of 20%. Certainly last year, if not the year before, was led by the Magnificent Seven. So I have one question and one question only for Taylor from Life Goal Investments. Let's welcome him to the stage, and let's remind you, he is a 12-year Wall Street veteran. How you doing, buddy?
Doing great. I'm interested to see where you're going to take me right now, because this you throw me a curveball and let's see if I hit it.
All right. So I'm going to try to put you in a box. I'm going to say you have one bet, right? You have, pick a number, 10 grand, 100 grand, $1 million, whatever number you want to play with, but you only could put it in either the Mag 7 or the Russell 2000. You cannot play both. You cannot split hairs. You cannot do portfolio management.
I can't worm out of this?
Yeah, you can't worm out. You have to pick one or the other, and then we will steel man both sides. So again, we'll start with your pick. Are you going Mag 7, 3 for 3? Or are you going, you know what? It's time for Russell 2000 to have some sun, and you're picking Russell 2000. What are you thinking?
Yeah, I'm going to take the Russell 2000, which is not going to be a popular bet right now.
I like that, because again, I get really nervous when everybody's on one side. So okay, we're taking Russell 2000. I like it. It's encouraging. It's probably opposite of what all the momentum players are on. So let's talk other reasons why the Russell 2000 in year 3 of this cycle.
Yeah, the Russell 2000 has just been, and Russell 2000 is the smallest 2,000 companies, not smallest, but typically they'll have a market cap between 1 and 3 billion-ish. Broadly defined, which is a fraction of a fraction of a fraction of any of the Mag 7s.
All the Mag 7s are a trillion, right? They're trillion. Some are multiple.
I believe all of them are. I think there's 8 now, because Broadcom, I think, joined the $1 trillion club as well as another chip maker there. Yeah, so when you think about kind of small caps in general, small caps are more domestically tied than they are international. So that's one point. The point that has really caused small caps more recently to struggle is interest rates. Higher interest rates are tough on smaller companies because they aren't the Magnificent Seven that are just cash flow exploding, and therefore they don't need to finance a darn thing. And that's not the case with small caps. They need to go to banks. They need to take out loans. And therefore, when banks get more stringent, because they have, regional banks and even big banks have curbed their lending to an extent, raised their standards when Silicon Valley Bank went under, et cetera. And then just generally speaking, interest rates at large have moved up. Revolving interest rates in the front end now are coming back down with the Fed, but where they're taking loans out on a longer term basis, that's all stuff that's gotten markedly more expensive.
Yeah. The other thing that I like about this call is I think so Russell 2000 call means that rates are probably lower throughout the year than higher. Would certainly be a part of your thesis.
I think so. Let me caveat one thing there, though. I think that even marginally higher interest rates, I think it's a valuation thing at the end of the day. And I'll talk about what those valuations look like. But I think that the market's bracing for higher interest rates. And you've seen Russell 2000, small cap companies, when Trump kind of started his tear on the election cycle, they rallied huge. And then they've basically round tripped. So they're back down to basically where they were at pre-Trump bump that they got. And a lot of that is because interest rates backed up so much.
Yeah. I think it's really interesting to think about the Russell 2000, because I think there's a couple of things that I think are true. And again, this is your area, not mine. But I think for the last couple of years, Russell 2000 has had a lot of wind in their face, not only higher rates, but there was general uncertainty. There was I think it was Lisa Khan at the SEC made acquisitions, less appetizing. And there's just a general malaise in net new capital and investments. And, something that we saw last week, and again, we have receipts, was that JOLTS report. Remember I told you the JOLTS report was a surprise, and I got that right.
Yep.
And I think we've just seen a appetite. And, my expectation is the Mag 7, frankly, can't get more rosy, right? It's already, all aces, to use an analogy from a previous video. You can't you can't go higher. Right. But, the Russell 2000 has been playing, 2-7 offsuit. for a long time, and things can only get better from there. So, I think part of this call, at least, from where I sit, is, one's been dealt a crappy hand for 2 or 3 years, and the other's got nothing but aces, pocket aces the whole time. And I just don't think that trend continues. There's this thing called mean reversion, and this might be the year.
Well, let's talk a little bit about that. So I will give one more headwind, kind of on the headwind topic. The makeup, the construct of the Russell 2000 leans it very heavily in the financial space. So that hasn't helped, is that, the smaller banks have not fared well through this whole kind of 3-year cycle, if you will. And the other side is the Mag 7 is, I mean, you can say Tesla and Amazon's not tech, but it's all tech. Let's call a spade there. But yeah, when you look at long term, so let me give you some valuation numbers right now. So the Magnificent Seven on average trade at about 30 times earnings right now. So every dollar worth of earnings that hits their bottom line, the market's paying $30 for it. Right now, when it comes to the Russell 2000, that's at 15. So literally, you have a 50% discount from a equal dollar worth of earnings.
Dollars a dollar, right?
Dollars a dollar. And people talk about profit margins. I'm like, no, that hits earnings.
Yeah.
I get that.
That's part of the equation.
That hits the bottom line. So that's all an apples to apples comparison. Now, the big argument for the Magnificent Seven is that they have such a wide moat. And there's
it's got to be growth rate, right? Doesn't it have to be also growth rate?
And certainly growth rate. No doubt about it. And to your point that you made there, when you look at kind of small caps in general, there's been massive headwinds. Some of that will be alleviated, right? Deregulation by the new incoming kind of presidency should help along with that. But people have forgotten that over the long term, higher risk means higher return. And so typically where you're buying the highest level of risk is in the small cap space. And when you look at long-term returns by style box, large, mid, small, growth, core, value, you've wanted nothing but large growth recently. But over the long term, you've wanted to be on the exact opposite side of that coin, which is small cap value. Small cap value, even inclusive of the massive rip we've seen in large growth, over the long term has historically been the number one performing style box when it comes to the domestic stock market. It hasn't been lately. Let's call a spade here. But I'm a believer with you that there's a reversion back to the mean. And after 2 years of almost 25% returns, all driven by the top 10 names, the top 10 names now make up darn near 40% of the S&P 500. And as we have free money and helicopter money coming from monetary policy, fiscal policy, et cetera, it's gotten spilled into the most popular trade, which is index investing. Index investing is disproportionately funneling money into these top 10 names at $4 out of every $10 going to them. But if you see a flip on that, then obviously that could be a disproportionate sell out of those largest companies. And the largest company, being Apple, is not growing.
No,
it's not growing. Go ahead.
Yeah. The other thing I was thinking about, kind of Russell 2000 versus the Mag 7 is, I actually said it today on the Daily Financial News. I actually think that 2025 might be an amazing year for mergers and acquisitions.
Totally.
And so is that something that you see? And again, I think the Mag 7 will be included in that. I think the last, SEC chair, Lena Khan, I think her name was
it is,
basically if you're one of the Mag 7, you can't buy anything kind of strategy. Correct. I think there will be some kind of bolt-on tool acquisitions, acqui-hires, if you will. I think 2025 is going to be a pretty busy year for mergers and acquisitions. What do you think?
Yeah, and you saw it in financials and the prices of them recently. The big banks who are designing all of these M&A activities, if they do come to fruition, saw a nice pop on earnings and also expectations that's going to show up to the table this year. Yeah, is it easier to go out and reproduce what a smaller company has done if you got to buy them for $1 billion? That's a drop in the bucket to these big names. They're so cash flow generative that they could just say, hey, let's buy that. We don't want to spend 6 months trying to build it out and compete with that company. Let's just take them out. So absolutely, mergers and acquisitions should certainly pick up. And generally, beneficiaries are the smaller companies. Typically, when you have a merger take place and a large company buys a small company, you get a reprieve in the price on the top name, where the name actually comes down, and then the acquired company obviously gets a nice pop out of it. So it's kind of dual fold there, if you want to look at it that way.
Love it. This is going to be a very interesting year. We're going to be coming back each and every Monday. Taylor, where can people find you?
Yeah, find us at Life Goal Investments. We're on both Instagram and TikTok. We put out daily videos that are 60 seconds long that people enjoy.
There you go, folks. And again, let us know below. Let us know. Are you picking Mag 7 for 3 for 3? Are you going reversion to the mean Russell 2000? It'll be
my guess, by the way, is this is 70% Mag 7. Let's see.
Let's see what people
Come
say.
at me.
There we go. Let us know. Thank you, buddy.
Appreciate it.